So far as income tax purposes, and I suspect estate tax purposes as well, virtual currency is property. So if you have a sale or exchange of property, you have to recognize gain or loss on that. If you receive property for services, it's income to you. If my firm decided not to pay me a salary, but instead to give me a BMW for my year's services, that's still income to me. And not only is it income to me, it's wages. There needs to be withholding on those wages. Even though I was paid in the form of an automobile, it's still compensation to me. The IRS has said the amount realized when dealings in virtual currency are based upon the fair market value of that virtual currency. When reporting things to the IRS, the amount must be measured in US dollars, not in different currencies. Gains on the holding of virtual currency very much track the gains on property. If you hold property for a long period of time, that is more than 12 months, you will likely be able to treat that property as capital gains, whether it be long-term capital gains or, long-term gain or loss. If you are a dealer in virtual currency, you will need to treat that virtual currency as inventory, and you have to recognize ordinary income on that. For our miners that receive virtual currency in exchange for their personal services, it's income, ordinary income to them. If you are paying your employees virtual currency, that virtual currency is treated as wages, and there must be withholding on that virtual currency. Talk to the income from mining. Oh, if you are receiving mining income, and you are self-employed, guess what you owe? Self-employment taxes. Yes, you have to pay both the employer and employee share on the virtual currency. Now, usually at this point in the lecture, I get someone, usually someone who deals with clients who aren't the most diligent at reporting things to their accountants or their lawyers. How on earth is the IRS ever going to find out about this? And I'm not sure if I don't know if you guys are shy or you're already ahead of me. It's a good question. How will the IRS ever find out about this? The only type of reporting that is remotely required deals with the Form 1099-K, and that is transactions from third-party settlement organizations. And here the transactions have got to be more than 200 per year, and the amount of currency has got to exceed $20,000. And these are the types of payments that are being made to merchants. Usually these are the credit card companies issuing or the PayPals issuing the Forms 1099-K. So it's possible that some folks who are dealing in virtual currency have a 1099-K reporting obligation. But think about what's not required on that. If I run an exchange and you have a gain or loss on your transactions, currently the exchange has no requirement to report your dealings to the IRS. You might have bought your Bitcoin for $2 and sold it for $5 million. There's no obligation on the part of the exchange to report that to the IRS. That may change. In fact, I would expect it to change in the coming months. One of the difficulties for the exchanges, however, is even if the exchange has good enough records to know what the currency was purchased for, that is the basis, the exchange doesn't always know where that virtual currency is going to and what it's being used for. So, my example, I purchased my Bitcoin for $1. I now want to exchange it for a BMW for $50,000. And I ask my exchange, send my Bitcoin over here to the BMW dealer. Now keep in mind, the exchange doesn't know who the recipient is. All they know is there's a public key associated with somebody. It could be anybody. In fact, that transfer from my account to another account might not be a transfer from my Coinbase exchange to the BMW dealership. It might be from Coinbase to Kraken. Well, if I've got a transaction from one of my accounts to another one of my accounts, I don't have a taxable transaction. All I've done is move my money from one bank account to another. So if the 1099 obligation were forced on the exchanges, they will need to know whether or not that exchange is taking place for goods and services. Elizabeth.
So if you are a trustee or an executor, how do you know if your decedent has this sort of thing?
If you are a trustee or an executor, how do you know whether your decedent has this? Well, first, are you only an executor after the deceased has passed? Or are you a trustee or executor prior to them passing? Sorry, good point. You're not an executor until they die. But you know full well you're going to be a fiduciary after death. I guess my first question, my first observation is ask them. That's number one. And number two, and this is a real thing. It's a real problem. And I don't know if it's apocryphal, there is one story with a Canadian who allegedly had $150 million in virtual currency, someplace, unknown where. The wife, the heirs, the executor can't find his private key. And without his private key, they cannot access his virtual currency. Now, I say it's apocryphal because you don't know whether the story is true or not. They could have simply made that up saying, oh, we were bilked out of this. But it would not surprise me for a trustee or an executor not to be able to access those funds because you don't have the private key anymore. And this is especially true for those folks who might want to keep things hidden from their family or creditors. We had one prospective client come to us on an SEC investigation matter. They did not become a client of ours. They had told us they were going through an initial coin offering, which I'll explain a little later in the presentation. That initial coin offering was done by having would-be investors transfer virtual currency and fiat currency into a wallet located on a laptop. They told us that $650 million had been transferred to that laptop. We said, great, well, if we're going to represent you, we're going to need to secure that, number one. Oh, well, we don't have that. What do you mean you don't have it? Oh, it's in Cairo. Excuse me? Yeah, you know, the guy who's, I think is his family right now, and we haven't heard from him in a few months, but yeah, all the currency's on that laptop. Do you think those funds are coming back to the U.S.? Do you think those funds are going back to the investors who may have been defrauded? No chance. Now, mind you, obviously, I'm dealing with people who are engaging in fraudulent activity, things that were clearly crimes, and our U.S. exchanges, unless they are taking the risk of going to jail, are not engaging in that kind of thing. The bigger area we see with regard to exchanges is where the exchange truly is committing a fraud on their account holders. It's come send money to us, and we'll tell you the money is in there, and it's gone, it's spent. Obviously, they're committing a fraud. I won't say it's a Ponzi scheme. I think it's just straight out theft. And there have been a number of exchanges that have been shut down, and a number of folks who ran those exchanges who've been prosecuted. So, while the IRS has given us sort of one notice with regard to virtual currency, the AICPA last year did offer additional guidance to the IRS in 11 different areas where how they thought virtual currency might be taxed in areas where the guidance isn't so clear. It's not so clear because there just isn't any out there. And let me say, in meeting with the IRS, both their counsel and the field folks, they're willing to hear from us. If you guys want to write the IRS a letter about how you think virtual currency should be taxed, they're willing to hear. They haven't done anything yet, but they're more than happy to hear from practitioners.